9:30 a.m. But it's been a bit hectic this morning. As you can see, it's a lot of things going on in the markets, a lot of people to get hold of in the early morning. So that's why we're starting a little bit later. We're going to take a look at the markets that we usually do today. We're going to talk, of course, about what's going on. There's a lot of activity, obviously, on the back of what's going on in between the US and Iran, and now Iraq as well. It's obviously been Iraq. It's always been there, right? But we're starting to see some action, like FTSE 100 is slower. You have gold prices rallying to 60 highs, and you have Bitcoin and crypto markets in general going up on the back of this. And there's several explanations to this. Bitcoin and cryptos in countries like Iran, where you have control on money and financials, it's actually quite popular to use cryptos. And in many countries in that similar situation, say, well, I wouldn't say similar situation, but you have Venezuela, for example, which has a problem with inflation. You tend to see people going into these digital assets, and that's why we're seeing a bit of a rise here. And the reason, as you know, is because of the killing of a big general and big Iranian general, which is supposedly was the head of special forces within the Iranian military, separate one section which is supposed to make sure the Revolutionary Guard, Islamic Revolutionary Guard, I think it was called. Long story short, he's like the CIA of head of the CIA from in Iran. That's what it is. Make it very simple. I think most people know what the CIA does. So he was killed, and he was killed in Iraq. And now in Iraq, they have voted to they want the Americans to leave. It was a non-binding vote, but I think it's definitely a big blow, and I definitely don't think that the U.S. was anticipating that. They have a big airfield there, the U.S. Base that they have built up, and they obviously don't want to leave that behind. But not only that, they'll lose some significant access in that part of the region. They do have a ton of other bases, like in the Persian Gulf, like within, for example, Saudi and these places like that. But it's always good, of course, to have. Let me show you a world map, okay? Google Maps. I'm sure you know exactly, but there we go. There's Iran. There's Iraq. And I don't know exactly where all the bases are, but they definitely have bases around here. Obviously, it's always good to have bases through this whole thing here. And I'm quite confident they have bases in Afghanistan as well. So, it's different if you suddenly get kicked out here. And they're literally sandwiched between Iran and Syria. And you have as well Lebanon as well with the Hezbollah. So it's not really going the way I think President Trump wanted. And I'm not sure we're going to have any war. No one really knows. No one has a crystal ball. But they might try to strike back. But the fact that they want them kicked out of Iraq, I think that's quite a big blow to begin with. And much geopolitical tensions is just picking up dramatically. So is it gonna escalate? No one really knows. Some people say that maybe the easiest way for Iran to do anything about the situation here, trying to strike back, is cyber war, or attacking a oil cruiser potentially. That could be something. But with what's happening in Iran, maybe they will just try to oust the Americans from Iran. Who knows? So we have those various scenarios, and as you can see here, gold is up with 1.59%, and it was already up quite a bit already last week, right? So things are definitely going not more crazy, but going up. And you remember this 1,600 level? Well, we're there right now, and there's more targets here for gold. You have this target here that I discussed on the break here in summer of 2019, and the idea was for this to go up to 1,700 because you have a big head left and you have like a right shoulder. You have the ascending triangle, the break here, that's the 1,600 target, and then there's these are the primary targets, and then there's more targets as well if you become more creative. So it definitely looks like we're gonna have more of this. Now the problem here, because remember I was being bullish from here, the biggest issue here has been the risk, actually been bullish from down here. The biggest issue is risk reward ratio, and that continues to be a bit of an issue. Now I'm going to show you a setup in gold that you might potentially be able to use, and what we'd have to do now is I'm flipping to the 1 hour, because if I continue to just focus on the daily, well, the last low on the daily is down here at 1447. So even if I think it's going to go to 1,700 eventually, if I put my stop loss at the nearest low and then have my target here at 1,700, that's a 1-to-1 risk reward ratio. So that's not a particularly good risk reward ratio. So what one can do is one can flip to short-term charts like the 1 hour or 30-minute, and here you have a different set of lows, right? So you have this move here, and then you have this little section here. So now it's a little bit different. If you take fib from here to the high, you get these different levels, and then we have a gap here which markets love to close. That might come to a close. Ideally though, it happens tomorrow. So you might say, why? Well, because if the market is going to go all the way down and close this gap, then today's candle is going to be a big reversal candle, and we might have one of those big reversal candles at one point. But ideally it closes like this today, and then maybe tomorrow tries to go down lower, and the option here would be to start to look at around that gap. Sometimes the market just goes to that little point and then bounces. Sometimes it just goes down and tries to cover the whole gap. But the general idea is that maybe down here, so starting from about the 1560 level, it might potentially be interesting to get involved, and then target 1,600, and then we'll see how far it goes. And then the general idea is that one will keep tracking this to the upside, and then eventually at one point it will reverse and start to move lower, and at that point we can potentially start to buy that dip there. So this is what I have for you guys in gold. So the trend is bullish. Fortunately though, it's not like an opportunity, it's more of a short-term opportunity. Biggest risk of short-term opportunities, of course, is that you can get stopped out easily. Here's crude oil prices. Crude oil prices as well, they had a bit of a boost. So here's where the market closed on Friday at 63, and then the price moved upwards to 63.85. And this could, it's not as strong, and this could easily be covered, this little gap. And here as well, we have a situation where the market is just running away from us. So last week the market rallied all the way up, and I said if we come down we can look to buy, and the market did go down. It just didn't go all the way down the way I wanted to go down. So we're gonna do now, we're gonna put some fibs on this from this short-term level to this high. So that will be your 50% correction, and then we'll reduce the trend of funding level like that, and then we could probably do and try to do something like that. If you don't think we're going to go all the way down, then maybe just down to Friday's levels and close the gap at 63.14 could be something. There's other stuff as well. Remember this one. This is the dollar versus the Japanese yen. So we talked about this, and I even put an article about this on Investing Cube. And we had a nice rectangle, support, 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 resistance, resistance. That difference there is about was 138 pip or so. The difference that you just put it like that, and that gives you your target, and that is 106.95. And you have that break here. It's quite interesting because you had the break here, and then you had a push to the downside. And if you click here on about and Investing Cube authors, and click on my name, then you'll find that update. This is not correct. It's actually giving us, yeah, this is not correct. I need to double check this. It's giving the articles by all, by everyone here. Anyway, what I said there, if we go back down here, then traders are probably gonna look to sell, and surely they did. Has it really gone as fast down as I wanted to? No, but the trend remains bearish for now, and there's no real reason to change our bias. If it does swing up to 108.25, 108.35, I think people will try to sell. What about all the other markets? Well, this is the euro versus the USD. And last week we're trading up here. I said let it come down. Let's buy it at a better level. The market went down, and from here the market has bounced. So you should be up with 54 pip if you bought, and at one point you were down with 17 pips. So it's not bad. It's really good actually, and hopefully this can go up a bit more. If it does revisit the levels, then I think people are gonna buy again. For now, I'm just gonna leave this the way it is. If it goes up to maybe 112.23, you can probably peel off half of that, if not the full position. And I think at that point as well, when we're about to take out that level, trend defining level goes just below here. Here's GBP versus the USD, and this one here, I actually made a little update on this one this morning. Let me check something here. Yep. So I do several webinars, and I do one for clients only. And the idea was to buy here. This one is the one I shared with you guys last week, but I pushed this up because it didn't look like it was gonna go all the way down. So I did a webinar at 6 a.m., 6:30 I think it was. And the idea was just to buy here. And there's no change to my outlook here. If it goes down, I think people are gonna be buying again, and then they're gonna try to lift the price to the upside. Stock markets then. Well, not everything is good, and this is the S&P. And the S&P traded below support, which makes sense. And now the market is pretty much trading sideways here. I have a suspicion that more market needs to come down. In fact, as you know, all the markets were going up quite a bit, right? And the S&P as well. You can see how it sort of rallied quite significantly since the lows here in October. Market went up with 14%, and it's just really, really bullish. And people that don't usually make these sort of investments were calling me and asking me, which shares should I be buying. So it's definitely getting a bit more mainstream, this rally, and everybody getting super excited. But what is quite interesting is that the ISM number, see if I can find that one. So the ISM figure, which was published on Friday, let me see here, on Friday last week, that one was not impressive at all. This is the ISM figure. You can see the market, this index declined to 47.2, whereas the forecast was for it to go at 48.3. You can't see it here because we don't have too much data, but it's a 10.5-year low. So what's happening here is that markets rally ahead because people get excited to say, okay, I know we have trade wars, I know we have all this tension, I know we had a lot of rate hikes in 2018, but now we have the Fed pumping money into the system, we have the ECB doing QE, everybody gets super excited. So they buy stocks on the idea that this is going to translate into either inflation or into economic growth. And what happens now though is that these numbers, that economic calendar, the ISM number, did not pick up. And that of course is an issue because it becomes a discrepancy. And I did an article about this last week as well. And what's happening here is that if these numbers don't start to improve within the next month or so, there's gonna be problems, I think. And you have this week on Friday, you have let me see here. This week on Friday, you have the known from payrolls, right? And that as well is something. If that number disappoints, that could easily scare the market. But the ISM is just one part of the story. You have the market PMIs, and these are more important. And you have the market composite for the euro area. So that printed 50.9, which is not that much better than the 50.6 prior. And then you got for the UK 50, which again is just above the threshold. This is not a roaring market, is it? It's not like the stock markets where literally things just roared up higher here. So I think what needs to happen here is that we need to see better data as a minimum, I think next month. If not, the market's gonna start to get really, really nervous. I do think though in the longer run, if you from a load my Dow chart, I think we'll have a bunch of trend lines here. Let's see if I can recreate. So this is just an Andrews pitchfork. So you can see how we're at the higher limit up here. We had a shallow correction here, it did not work out. And I think if we do go down to 27,629, or in worst case a little bit lower, I think it's going to be a good opportunity to get involved. Unless of course we head into World War III, which I don't think we will. But obviously what's happening now in Iran versus the US, in the Middle East, is something that people definitely take as a reason to book profits. This is the German DAX. And the German DAX, we had some good success with this one, but it didn't really necessarily go all the way. So a few days ago in December, we said look to buy here, it went up, and then we said look to buy here again, and then it went up, and then we said look to buy here again, and at the last opportunity, this whole thing failed. If we look at this today, you might say, why is it so influenced? Well, what drove the DAX lower last week? Well, Lufthansa had a bit of a tough time, declined with about 7.5% on the back of higher crude oil prices. You had as well Air France, which is the equivalent in France, sort of weakening by similar amount, and that is keeping things under pressure here. Looking at this today, my short-term view on this one is now more neutral. You have of course support just at lower levels here, so might be nothing, but this is more of a rectangle here. So you got a few options. If you're really bullish and you think, well, this was happening in the US between well, the Middle East will blow over. You see, if you think this is the worst, it's not going to get worse, more worse than this, then obviously you want to be bullish from these levels, lifting price to the upside. If you're bearish, you would look for a break, because this is a classic little rectangle, and a little break to the downside here can take you down with about 4% to 12,287. And that, guys, is today's market update. Let's see if you guys have any questions. So we have Kara Marat here saying good morning with a little sun, and we have True Invention here saying, hey guys, Happy New Year. Happy New Year to you guys as well, and welcome back. I think this is the first, yeah, this is the first proper week. I was already in on Thursday last week, but this is the first week when more people start to come back from holiday. Okay, I think we're gonna wrap things up. Guys, don't forget to click on the video, and don't forget to like it. That's would be really nice. Don't forget as well to share. Let me see here. Everything is in Chinese for me right now. There we go. Share. You can just, that little link there, I'll send it back to you guys. Please share that with people. Put it on YouTube and places like that. As well, we have our outlook for next year, 2020, so this year. I'm gonna try to do more of these ones, but the Dow Jones trading idea is one that is included. That's actually my preferred trade idea. You can read this as well. It's just free to sign up and read them. Okay, we're gonna wrap things up, guys. Thanks so much for watching. It's definitely more exciting now than it was just a few months ago. Hopefully we'll get some more action, and hopefully, I mean, I would prefer to see this without any of the problems that we have, but it is what it is, and it's providing good trading opportunities for now. Okay, guys, have a great day. Be safe out there, and I'll see you guys tomorrow, same time, here on Investing Cube and the ATFX YouTube channel. Thank you, and bye-bye. Cheers.